Everyone. Unblocked is a bi-monthly event series where guests are asked questions in an AMA-style format, focusing on questions relevant to early-stage startups and blockchain technology. Unblocked is sponsored by DLab, a startup accelerator and venture studio that sits within the SOSV family. You can find out more at www.dlab.vc. We hope you enjoy the conversation. Welcome everyone to today's episode of Unblocked, where my guest is Phillip Liu, head of strategy at Ava Labs, which is an open source platform for launching highly decentralized applications, new financial primitives, and interoperable blockchains. Phillip, welcome.
Hey, thanks for the invitation. Really happy to be speaking about what we're working on today.
So it's not every day that someone launches a mainnet, and it's a pretty unique opportunity for myself to chat with someone just days after launching about their experience. So what went well and what could have been better?
So in terms of just specifically the mainnet, right?
Yeah.
I think things went relatively well. So on our end, everything was ready to go. There were some sort of dependencies and third-party sort of, like companies or, like third-party applications that we wanted to integrate with, primarily just to ensure that users, their funds were safe. And nobody was getting sort of scammed or, like with the mainnet launch and, like zero sort of existing infrastructure, you want to make sure that all the infrastructure pieces were in place. And so for us, it was a little bit of a challenge because there were a lot of third parties, and just to be very sort of clear about what I'm talking about, is just, the exchange operators, wallet providers, et cetera, that are sort of based geographically all over the world. And so for us, it was a little bit difficult to coordinate that because, like our platform was relatively new. And so the engineering it's not trivial, first of all, to understand. It's also not trivial to integrate with sort of a third party. So it was a little bit of a challenge to make sure that everything was going smoothly. It ended up being pretty good that I don't think anybody lost their funds. The users were able to send funds wherever they wanted. The finality guarantees were all there. And it ended up being pretty good. But we were all sort of up till very, very late, staying up 24 to like 38 hours.
Mm-hmm.
That was the range of how late we stayed up just to make sure that everything was running smoothly. So the entire engineering team and all the other sort of business development, marketing folks were all sitting together on, well, not remotely, but all on the same call, and just making sure that things were going smoothly and we didn't run into any issues. But overall, it was a good launch, and we had a lot of time to prepare too. So we were prepared, and it ended up being pretty good.
So that's great. So launching the mainnet's behind you. Where is Avalanche today?
Yeah, so Avalanche today, it's been a week, so we're still relatively early. And overall, I think the network is operating relatively well. We did not. It's not like we didn't run into some hiccups. So there were some issues with the sort of network latency. So to sort of take a step back, the promise of Avalanche is a very, very highly scalable and low latency platform where transactions are confirmed very quickly. And then there was a point where transactions, it took like maybe more than 10 seconds to confirm. And compared with some of the existing protocols out there, that's actually really good, right? You have to wait, a couple minutes to hours for some of these other platforms, but for Avalanche, that was considered slow, right? And so we had to look into that issue. Had to do with some of the nodes not being particularly sort of performant enough, kind of slowing down the rest of the network. And so we had to add in some sort of fixes there. And also, I think that it's sort of some education that we need to do on our part to make sure that all the participants in the network are contributing equally and making sure that transactions are being processed in time, and like we wouldn't have any lag in the overall performance. And so another thing about the Avalanche platform is that we enable thousands of validators, which is kind of unprecedented right now. Most other platforms, they only have a single digit, if not maybe like a double digit number of validators or nodes or machines that process transactions in the network. whereas Avalanche can allow arbitrary numbers of participants, which is a unique feature, but also that comes with some drawbacks, right? Because such an open platform, the quality of everybody's machinery may be slightly not as high quality as some of the other networks out there that are a little bit more established, since we are an up-and-coming sort of network ourselves. So there's that sort of issue, but it wasn't really anything. It was nothing critical, and that was sort of fixed and patched with the new update that we sent out. And then we had some users, like for example, we had an Explorer that was community built, and they had sort of messed up a couple of sort of parameters, and so one of the fields. So in Avalanche, we burn our transaction fees, and one of the sort of users, one of the guys in our community, he sent a large amount of funds, which is a sort of regular send, but that showed up as being burned. And so, and you could probably look this up. It was, I'm not going to reveal who it is, but on the Explorer, you could probably see this large transaction. It says like 900,000 Vox burned. And at $4, sort of a Vox coin, multiple millions of dollars that, we ended up having to look into it, but it ended up just being a sort of display issue on the Explorer. So things are relatively, things are still maturing, but no big sort of incidents yet. And the network is growing at a very, very fast pace. So we started at a couple hundred validators in the beginning, probably like 200, I remember, and now we're up to last I checked is 400 to 500.
Yeah, that's great.
Yeah, and so people are learning how this is working. They're we're sending out these sort of instructions on how to run a node, and people are sort of picking things up and sort of improving and sort of participating in the network as we sort of predicted.
That's great. So I guess following that thread, taking a step back, Ava, some of Ava's value props are high throughputs, unlimited scalability, interoperability, which I'm sure a lot of people in the blockchain community are sort of used to those terms because there's a lot of other blockchains that purport the same. So what is, could you just expand on that a little bit? Like how does Avalanche differ from other blockchains that make very similar claims?
Yeah. So I think it totally makes sense to start with something a little bit more basic. So just sort of some of the folks that may not be super familiar with the platform. So I think it's best just to tell this whole story from the beginning in a sort of chronological order to how we started and how we got to where we are today. And that would probably give all the sort of viewers today a pretty good idea of the entire architecture and some of the design decisions that we made.
Yeah, please do.
Yeah, so okay. In the history of consensus protocols, there's been roughly two different types of consensus before Avalanche, but just alluding there. Two different types. So we started with the classical family of consensus protocols, and these protocols, they were sort of brought up and sort of invented in a sense back about 30 to 40 years ago by two Turing Award winners, Barbara Liskov and Leslie Lamport. If you've heard of the sort of phrase, the Byzantine generals problem, this is exactly the problem that was being solved. So essentially, there's the Byzantine generals problem is kind of an analogy, but in very concrete terms, let's say we want to secure a common database, and I'm going to sort of speak in layman terms just so everybody can understand this, but we want to make sure that we're sort of securing a common database. And we have mutually untrusting parties that are all running machines to secure this database. And these untrusting parties, they don't have to behave according to the rules. They can tell lies to each other, right? So they can give each other sort of malicious data or sort of incorrect data, right? They could sort of delay messages or even sort of prevent them from being sort of issued to other sort of machines in the network. So they can act pretty maliciously, right? And so under this sort of adversarial environment, how do we make sure, how do we design an algorithm to make sure that this database is being secured by a majority of machines in the network? And so that was the sort of original problem. And Byzantine generals is something that you can sort of read about. I'm sure there's a lot of sort of material online about this. And so a lot of these sort of classical consensus protocols, they work very well for what they do. So, for example, Amazon or Google, these large tech companies, when they have a data center, they're probably running one of these classical protocols in the background, right, to make sure that the data is sort of synchronized and it's available. And if one of these machines goes down, then the system sort of operates as it should.
A lot of people don't realize that the fundamentals of blockchain technology has been around since like the 70s or something.
Exactly.
The late 70s.
So the sort of theoretical problem has been around for a long time, and the solutions have been around for a long time too. So if you've heard of the protocols like Paxos, PBFT, or Hot Stuff, which is what Facebook Libra is using a variant of that. These are all classical consensus protocols, and so they work well in the permissionless setting, but they don't scale up. So they're fast. They have that kind of scale, but they only, usually you only operate with like 4 nodes, right? Because you don't really need more than that. So they're not super decentralized, right? So you can't take them from the sort of permission setting and sort of bring them over in a way that everybody can participate in sort of validating the sort of database, or in the case of sort of open decentralized network, a sort of blockchain, right? And so that's one of the problems. And another problem is that they rely on all-to-all communication, which, I think these two problems are actually sort of one and the same. Well, if you have all the machines have to talk to each other, that incurs what's called quadratic communication. So basically, what it means is, so if there's n machines in the network, the number of communications is n squared. And so if you have 4 squared is 16. That's not too bad, right? But if you have 1,000 nodes in the network, 1,000 squared, that's 1,000,000. So it sort of scales up sort of in that sort of quadratic way, right? And so the number of communication, as the number of sort of messages that you have to send goes up, your sort of transaction sort of latency greatly sort of increases, and it takes a longer time for transactions to be processed. And so those are some of the benefits. Those are some of the drawbacks of the sort of classical family of consensus protocols. And so Satoshi came along in 2008, and he invented something that was completely new. He invented something that was, formally it's called Nakamoto Consensus. So a lot of people say, proof of work, proof of stake. They think that proof of work, proof of stake are consensus protocols, but very sort of academically, those are what are called simple control protocols. A consensus protocol is quite sort of literally like the process at which you come to consensus on a certain decision or database or blockchain, right? And so Satoshi created a new way of achieving consensus that the consensus protocol is very simple. It's follow the longest chain or follow the heaviest chain, follow the heaviest proof of work, to be more concrete. So the more sort of blocks that you have that in sort of Bitcoin, right? That means there's more sort of hash power going into building that blockchain. And therefore, the majority of miners in the system, who are the ones processing transactions, right, are endorsing that chain. And everybody has, according to the consensus rules, everybody should follow that chain, right? And so it's very sort of distinct from the classical consensus protocols where there's this all-to-all voting. And now, with Satoshi's Nakamoto Consensus, it's sort of voting with hash power, right? You're voting with your block and building that longest chain. And so I think there's a number of great things that Satoshi sort of invented here. One is that, unlike classical consensus protocols, Nakamoto Consensus is actually very, very sort of permissionless. Anybody can go out there and, buy a Bitcoin miner and participate in validating transactions of Bitcoin. Whereas, with classical consensus protocols, everybody has to know everybody else. So it's kind of a permission system, right? You have to know who's in the network. So, like if you want to join, they could just say no, right? So Nakamoto is extremely permissionless, and it really allowed anybody to sort of participate in the system, earn the rewards, and sort of participate in sort of the creation of these blocks, serializing transactions, et cetera, and then earning a reward for that. And obviously there's a lot of other innovations in sort of other sort of subfields that Satoshi sort of contributed to. There's obviously a sort of economic aspect, but just sticking with consensus, I think the Nakamoto sort of family of consensus is a pretty big breakthrough, and you can classify it as a totally new family of consensus because it works completely differently from the classical sort of family that came before. And so fast forward another 10 years, we come to the third new family of consensus that we like to call the sort of Snow family of consensus, and the sort of defining well-known sort of protocol being Avalanche. But and just a summary of how it works, and what makes it a little bit different from classical and Nakamoto. I would say it's a little bit similar to classical consensus protocols in the sense that there's a voting aspect. So when there's a certain decision, then you would sort of query your peers and sort of ask it for their sort of opinion on the decision. And if you get a supermajority sort of response, then you would change your own sort of decision to match that supermajority, right? So it's a little bit similar to consensus protocol, to the classical consensus protocols in that way. But one sort of defining feature is that we don't require all the nodes to communicate with each other. And so
what you're describing, so my understanding is that Avalanche is actually two consensus mechanisms, right? One is a more traditional chain-based one, which I believe is called Snowman, but then you're also using a directed acrylic acyclic graph, which is DAG for short. Is that correct? So what you're describing here is a DAG, basically, right?
Okay, so Snowman and Avalanche are both based off of the sort of underlying primitive consensus protocol Snowball. And so the two consensus protocols are different, but they're only different in the sense that they use different sort of data structures. And so how they work is, you can say that it's completely sort of different in how they operate from an implementation level. But the core primitive of Snowball, which was, the process that I described before, so we have multiple different sort of sub-consensus protocols that lead up to Snowball, which lead up to sort of Snowman and Avalanche. But just to follow on that point, how Snowball works is it's similar to the classical consensus protocols, but it does not require all-to-all communication. So every node in the network only requires a sort of all they have to do is query a statistical subsample of the network. So you just need to sort of query a subset of the validators there, and you can have almost the similar level of security guarantees that you have, at least with Bitcoin. And from a practical perspective, even it'll be just as safe as using a classical consensus protocol. So we do make some trade-offs, but the trade-offs are not from practical perspective, they aren't trade-offs at all, because users really just care about the user experience, and they're not losing their funds, right? And so we're not making such big trade-off that folks would be sort of the network would be experiencing double spends, people would be defrauded. And so I'd be happy to talk about those trade-offs, if those are of interest.
Yeah, I mean, so I guess a question is that if you rely on people sending the transactions, you don't need every validator to validate the transactions. Isn't one drawback that you need a ton of transactions to occur in order for the network to be secure?
Okay, so I think what you're sort of alluding to is how IOTA may be doing their original.
Well, I mean, IOTA is another DAG that I know of, and I'm sure there's others, but I know that that's one limitation of the IOTA network, so to speak. But I'm I'm sure you guys have thought about this since IOTA came before you. So
yeah. So I think there's a little bit of a misconception, and it's something that you just have to kind of be able to. You have to, working in this sort of field, you'll have better sort of information than some of the others. And there's a lot of sort of bad information floating out there. So just want to sort of clear a couple things up. So the DAG part, a DAG, directed acyclic graph, it's not a sort of consensus protocol in and of itself. So with the Snowball consensus protocol that we have, we can use that for any sort of data structure that's sort of needed. And so if we want to use it with a linear chain, and sort of support smart contracts and sort of support the Ethereum virtual machine, for example, we can easily do that, and that would be the sort of consensus protocol that we call Snowman. It's a sort of linear chain, right? It's a sequential blocks coming one after another. If you just want pure payments, then a DAG may work fine, because like a DAG. What's nice about a DAG is that you can have transactions happen in parallel. And so if I send a transaction to you, Paul, and if your friend over there sends a transaction to your parents, these two transactions are the transaction I sent to you and that other transaction over there are independent. And so you don't really care, we don't really care. You and I don't really care about the other transactions that are being sort of sent, right? And so we can sort of separate that logically and have all these sort of independent transactions be processed in an independent way and allow for sort of parallel, allow for transactions to sort of be confirmed in parallel. And so that can greatly increase your transactions per second, your throughput, and obviously increase scalability and all this stuff. But it's more of a sort of in the Avalanche system, it's more of an optimization. So if you don't need a strict sequential ordering, you could use something like a DAG to greatly speed up the number of transactions you can do per second. Although it doesn't really matter if we're using a DAG or a chain, the Avalanche is still going to the Snowball consensus protocols are going to be very fast. But if you want to get even faster, you could use something like a DAG. Yeah, so and back to your point about IOTA works somewhat differently. And I think the core thing to sort of remember here is we always want to be thinking about first principles, and and think about first principles is just thinking about things from a consensus sort of standpoint, and that being defined as you have a single decision, right? Very simply explained, like, do we want to go out to get pizza or go out to get burgers? And we have a room full of 100 people, we want to make that decision. And that's a process of consensus. And assuming some people can lie and sort of delay messages, right? Which makes the problem hard. And so to bring that as a more concrete example into crypto, so if we have a double spend transaction, so say I have 5 Avax and I'm sending 5 to you, and I'm at the same time I'm trying to defraud maybe your parents over there and sending 5 Avax to them, right? The network needs a way to pick between those two transactions, and so it's as simple as that. What is the process by which you sort of pick one of those transactions to be confirmed that's sort of publicly available to everybody else? And so in classical consensus, everybody votes, right? And if they get above sort of 2/3 of a vote, so for example, everybody's voting on those two transactions. So if one of these transactions gets above 2/3 of the vote, then that transaction is confirmed. So the mechanics are pretty simple, right? Nakamoto, there's 2 transactions, right? And then somebody mines a block, picks one of those transactions, and puts it into the block. And there's sequential blocks that build upon this block in the Bitcoin blockchain. And so in Bitcoin, you wait 6 confirmations or 6 sequential blocks for your transaction to be sort of included with very, very high probability that it won't be reverted and there won't be a chain reorg, right? And Avalanche is a similar process where you're doing a statistical subsample, so you're not asking everybody, but everybody's doing this. And for example, I, as a node in the network, I asked 10 other nodes which transaction should we pick. For example, I get back 7 people that say we should pick transaction A. Then I will change my own response when somebody else asks me to I pick transaction A. And so everybody's doing this until the network comes to consensus. So yeah, that's a very sort of core primitive, and hopefully it gives folks a some light into consensus and how Avalanche works. And just to go back to some of the other protocols that may have been broken and had to put it in a sort of centralized coordinator, their consensus was not safe, right? They allowed it so that part of the network would sort of confirm one transaction, part of the network would confirm another one, because the consensus was not well thought out in the beginning, right?
Mm-hmm.
And so it always helps to think from these first principles and say that, like, okay, so there's this attack. How do we make sure that our network is safe under this attack, and how do we make sure that we're guaranteeing things being sort of processed quickly, and we don't have to wait a long time for this sort of process to happen and to finish.
That's super interesting. Also, by the way, if anyone has any questions in the crowd, just dump them in the Q&A, and I'd be happy to answer them. So the next question I had, though, is, there are validators in the market, and they're responsible for sort of validating, the microtransactions or transactions, and thus guaranteeing the security and the integrity of the market. A bunch of other blockchains, the biggest problem here with validators and or miners is that you need there's a steep learning curve, so you need some technical competence. B, there's some hardware constraints. Some of them are quite expensive, so you need the capital to buy that hardware. How easy is it to be a validator in Avalanche?
Oh, it's super easy. I think maybe you yourself, Paul, you could, maybe after the call, we could set up a node for you.
Okay, yeah. I've got a Raspberry Pi, so I mean, I don't know if I need that, but
we'll see. But the sort of, we've made it really easy for people to be able to sort of run a node. So what's nice about Avalanche is also it's very, very lightweight as a consensus protocol.
Mm-hmm.
And so we don't have, I'm sure you've heard of stuff like slashing that Ethereum has, or
mm-hmm.
Some of the other protocols have, where if your node is not behaving well, then you may be at risk of losing your funds,
mm-hmm.
right? It's kind of a penalty for you either acting maliciously or, not
your power goes out and it's down for 12 hours and you get slashed.
Exactly.
Yeah, some things are unavoidable. Yeah,
that kind of stuff, and it's relatively dangerous. I know that in some networks, folks have already lost a lot of funds. We sort of, and this is more sort of philosophical sort of standpoint that we're coming from, but also a design decision that I think holds some some sort of practical sort of grounds here, but. We don't have that concept of slashing, so you don't have to be sort of worrying about, losing your funds. However, if your node does not have sufficient uptime, you may not receive your reward. So I think that's sufficient deterrent for people to, actually contribute and not just sit around and run a node that doesn't do anything, right? And so the process of setting up a node, I think the hardest part is just configuring things. Like you can, but we already have some tutorials online. I'd be happy to share those with any of the sort of guests that are joining today. If they're interested in taking a look and setting up a node. But it's relatively simple. So if you just download the sort of binaries that we have, they're already, everything's sort of prepackaged, so you can just sort of run.
Well, do you need I guess, do you need to have some coding experience or some knowledge? Some scripting knowledge.
You probably have to have some knowledge of like the command line, so you can move files around and copy and paste commands. You can run a node right now, and we do want to make it easier for folks, maybe down the line. But it'll be hard, if there's a sort of GUI or something like that to make it a lot easier for people. But and unfortunately that doesn't exist today. I think,
and you could run it on a Raspberry Pi or something, or your laptop.
You could, yeah. So assuming that there are some baseline sort of hardware requirements, so you do have to have sufficient amounts of disk space and sort of CPU and bandwidth. But if those are sort of met, I don't think that you'll have an issue with running a node. And so the alternative for folks who are unable to or unsure if they want to run a node is we do have a delegation feature, and so you can just go to a website and sign. We have a wallet, and you just sign a delegation transaction, specify which node you want to delegate to, and then just a couple clicks.
Oh, that's great. And so how many you guys just launched, but how many validators are there today? And I guess side question to that is that how many of those validators are not associated with Ava Labs?
Yeah, so I actually just sort of looked through it today. So I don't know the exact numbers, but I think we're in the couple hundred, 400 to 500 is what I remember. And you can check this on our Explorer. Maybe it may be more or less than that. The last time I checked. In terms of how many nodes that we're running, I think so. If you define it as the nodes that the company and the foundation and the employees are running, I don't actually know that because I don't know who at Alpha Labs is running a node. I'm personally running 2, but I don't know how many people are running nodes internally. So in terms of the company and foundation, I think it's about 70 of those are ours right now. So a large portion of the network is actually being run by Ava Labs or Avalanche affiliated validators, which is pretty cool to see. And if you look at our we have a Telegram channel with sort of a staking channel for folks just to sort of ask questions and talk to each other. There's a lot of people posting ads right now. Like, hey, it's a little bit spammy looking, but it's like 100% uptime, like 2% fees, like delegate to us today. And so we're seeing this little micro economy of like these little service providers on Avalanche that are providing these sort of validator or delegation services to folks. And I think it's good because it allows folks to compete with each other and make sure that they're providing a high uptime node that's contributing to the network. And otherwise, like why would I delegate to you? There's so many other nodes that are with high uptime, right? And I don't want to jeopardize my rewards being sort of foregone by delegating to the wrong node, right? So it's forcing users to pick the right nodes to delegate to, which is quite nice to see.
Yeah, that's great to see. So now that you guys are live, is there anything, are you waiting for others to come in and build, applications, developer tools, things like that? Or are there already things that are built today that people can use the protocol for, aside for just sending, one Ava from me to you, for example?
Yeah, so and back to your original point about the different consensus protocols and the different chains that we have. So we have 3 different distinct chains, and as you sort of alluded to, the Snowman chain is the Snowman consensus protocol is what validates the linear blockchains that we have. And so we have 2 linear blockchains. One is for the platform chain, which handles the staking and delegation and all that good stuff. We also have what's called the X chain, and the X stands for sort of exchanging assets. So you can send your AVAX around. It uses the Avalanche consensus protocol, the DAG protocol that you mentioned. And so you can not only send around the AVAX token, you can also issue your own assets on the X chain very easily. There's a standard way to do that. And yeah, it's a sort of asset chain, very fast, but it doesn't support things like smart contracts because it's DAG. And as some of the folks, I guess it's somewhat well known that it's hard to support. It's impossible to support the smart contracts exactly that Ethereum has on the DAG, right? Because you need a total ordering to support the smart contracts. And so we have another chain called the C chain, and that is a totally ordered chain that uses the underlying Snowball consensus mechanism and builds the Snowman consensus sort of chain that we have, and that supports the Ethereum virtual machine in its entirety. And yeah, well, what's really nice about that is that we support all of the applications or all the tooling really, and potentially all the applications that could be ported over to the Avalanche chain that exists on Ethereum today. So it's not really too difficult to sort of develop on Avalanche because you can quite literally just take whatever you have on Ethereum and bring it over to Avalanche. It's copy and paste, and maybe doing some modifications because Avalanche does have some particular features, the quick finality, et cetera. It's, maybe you configure your application slightly differently because of that. But yeah, that's really, really nice for developers because MetaMask, Truffle, all those developer tools are just readily available on the Avalanche chain today. So to your question, there's more tooling being built, and because our architecture is slightly unique, I think that's always the sort of process, and it took Ethereum years to get.
Yeah. No, it's a problem with every it's a problem with every blockchain. They build something that promises that is cool, that's has an elegant design, but then the problem is once they go live, they need you need developer tools, right? You need the devs, you need the developer tools. So I guess following that thread, what is Avalanche's plan to bringing those devs over and eventually those users over?
Yeah, so I think there's two ways to look at this. One is, if there's any sort of existing dApps that would benefit from the high scalability and throughput that we have, they're able to sort of experiment with Avalanche today, or Avalanche the platform, the C chain on the Avalanche platform, right? To be more precise here. But I think for us, our philosophy is that we want to bring in some of the sort of talent and resources that don't exist in blockchain today. It's part of the sort of, we haven't really seen the full extent of what decentralized systems can offer. And I think there's a ton of potential and ton of talent that, that may not be super familiar with the space yet, but can make, a very, very large impact, but with radically new ideas that we haven't even seen in our ecosystem today. And so, one is being able to offer a platform, and just to summarize, one is to offer a platform that improves upon some of the features that Ethereum has, but another one is, we're actively going out there and sort of educating folks on, what our platform can offer, and seeing if there's any sort of new applications that we can create from folks that aren't already in the crypto space, and bring them in and have them develop applications on our platform. And we have this grants program that we call the Avalanche X, where as a sort of project, we've raised a decent amount of sort of capital through various different token sales, and we'd like to ideally use those proceeds for things that can benefit the platform as a whole. And we acknowledge that as Ava Labs, we're kind of just one company, right? And we'd like to be able to sort of branch out and get more teams developing sort of applications in a decentralized way on the platform. And we can't be the ones doing everything, right?
Yeah, no, of course. What kind of projects are you guys looking for? Do you guys think are necessary? In terms of first principles, right? Of course, like a DEX or a gaming company would be great, but there are probably some other things that need to be developed before those types of things can be made. So do you guys have, what are the type of things you guys are looking for?
That's a good question. I think the biggest thing that we're looking for is more a larger variety of assets on the platform. So I think what Ethereum has going for them right now is, there's a very large variety, and some of them more high quality than others, right? But
that's putting it lightly, yeah.
Yeah, but at the end of the day, there's a very vibrant ecosystem of assets on the Ethereum ecosystem today. We obviously want to sort of gear towards having the sort of higher quality projects and higher quality teams that are actually building something of substance on the Avalanche platform. But I think just getting these assets on, I think for us, I think we have a very large focus on finance. Happy to go into sort of how we came to that sort of realization and the focus. Not a huge, long backstory, but there's reasons for that. And it just, long story short, we just think that the financial sort of applications are probably the most promising right now.
And by assets, you're looking for things like other tokens like a Uniswap or a set protocol or a DYDX, those types. Is that what you mean by assets? Even though I know DYDX actually doesn't have a token, but
yeah,
or
yeah.
Aave, or well, all these other platforms.
Very good question. So yeah, assets, yeah, could mean like a bunch of different things. So anything, an ERC20 token is good.
Yeah.
Any ERC token could be an asset. But I think what we were more thinking about was having a very diverse set of financial instruments that represent, multiple different things that may be useful to the end consumer. So for example, yield farming right now, it's a pretty big craze, and people are farming governance tokens. So I guess there is some merit to the governance tokens. I think there's a lot of people actually contributing in some of these sort of decentralized.
Depends on the governance token, but
yeah,
at least in my opinion.
Depends on the token, but for some of them, there's some pretty active participation, and I see some really interesting things going on. And then maybe following along with that train of thought is the farming process is risky, right? And so we're seeing protocols pop up, and some of those sort of NFT tokens, those I would classify them as assets as well. And having that sort of large array of tokens are useful for people who are doing something. So I would say like the insurance tokens are probably useful for the folks who are putting up their sort of collateral, putting up their assets at risk in some of these sort of AMM pools, for these automated market maker pools, right? And so I think having that sort of large variety of different types of assets that can solve different types of problems, I think is something that I would love to see. The new sort of assets that we haven't even thought of today is something that that we actually have some projects in the pipeline.
That's
some
great.
Health mode, but new sort of swaps and derivatives that can be constructed by combining other derivatives is that's a high level summary for a project that we have in the pipeline. But just new things like that, right? That things that we haven't seen before. I think it will be super interesting to see how they can leverage our platform to build what they want to build that maybe couldn't have been sort of realized with Ethereum, right? With higher scalability.
Yeah, no, that's interesting. I guess quickly, you mentioned insurance tokens, and I don't want to, I guess, go too deep down the rabbit hole, but they strike me as kind of silly because they're basically used. I guess the premise is, and maybe I'm wrong, but they're used for insurance on in the event that you trust a smart contract and you lose your funds. But most of these times, people are going to be using them for smart contracts that are very clear are unaudited, and are super risky. They put it on their website like, hey, this is risky as hell. This thing is unaudited. It's just a project. And so it strikes me as bizarre. Like, why would I buy insurance for something I already know is insanely risky, right? It's like me building a home, like, right on a cliff when it's like, all right, you're going to need insurance because in 2 years your house is going to be gone. It just seems silly, right? And so I don't really get. It just seems like you're paying an extra fee. You're probably paying extra gas fees as well for a product, for something that it's just, why buy insurance for something that is risky already? It just seems silly, but maybe I'm wrong.
No, I think you bring up a really good point. And just thinking out loud here, right? Because
of course, I'm thinking out loud too, but it's
no, exactly. So don't hold me to what I say here. This is a little bit out of my expertise. I see what's going on from a very sort of third party perspective. I haven't really bought any of these insurance products myself. Dabbled around with some of the yield farm stuff just to learn about what it's about and how it works, right? But nothing like super substantial. So obviously I'm not an expert in this area. Quick disclaimer. But I would think about it like this, right? So anything with risk, there's a probability that everything goes well, right? And the probability that this thing fails. And so you want to make sure that so if you're looking at it through an investment sort of decision, you want to make sure that what you're doing from a holistic perspective is positive expected value, right? And so if something and this is like basic statistics, like if you have a scenario where there's a 50% chance of you making $5 and a 50% chance of you losing $1. The expected value of that, let me think about that. What does that actually equal? So 5 multiplied by 50% is 2.5, and then 1 multiplied by 50% is 50 cents. So it's like 2.5 minus 0.5. So you have a positive expected value of $2, right? And so would you take that bet? I would just, I would take it. Like it depends on, I would also think about how much I would want to sort of contribute to that bet. I don't want to bet the whole farm, right? But it helps to look at things from a quantitative and sort of probabilistic perspective, right?
No, it does. It does.
In the long run,
definitely,
in the long run, that you're profitable. So thinking about it, back to your point about yield farming and the insurance on it, I would say and from a non-expert perspective, I would say as long as so assuming I'm doing the farming and also buying the insurance product, as long as the sort of payout that I get if something went wrong, that is enough to offset the amount of loss, right? And using the probability of the so I don't think any it's hard to say that all these contracts are unsafe, right? So even if something is unaudited, it could be secure. It could be 100% secure, right? But there's also an exponential chance that a very, very small infinitesimal sort of chance, sorry, not exponential, but infinitesimal small chance that it may fail. And so as long as you hedge your risk enough with the insurance product and your overall sort of income is positive, I would take that.
Yeah. No, I mean, I guess, the way you say it, that makes sense. I guess conceptually it's like, if I'm buying a car, if I bought a car for a random car company, it's like, hey, we just built this thing. We're not sure if it works. It's a project, and then I want insurance on top of it. It's kind of like, I want my cake and eat it too, right? That is just like that basic premise. But, getting back towards Avalanche, with you mentioned earlier that you guys have a focus on finance. It's on your website. It's very clear. And I'm curious as to why you focused on finance. Like, what was the genesis of that idea? Was that always the expectation that Avalanche was geared towards financial applications?
Yeah. So I slightly alluded to this in the past. I think that the premise was that we did some like deep soul searching about the space and what we thought was promising. And what we sort of there's always been this existential question, like, what is the killer application of blockchain, right? And I think in the sort of 2018 era, this question was asked a lot because a lot of those applications in 2017 that people were talking about didn't really pan out. And people were asking this question, and it was kind of a bear market kind of environment. And we were just trying to figure out what where are we going next, and so we thought pretty long and hard about this, and our conclusion was that the killer application is already here. It's been under our nose the entire time. For somebody in crypto, it may not be sort of as obvious evident because it's something that we it's something that we kind of just see every day, and it just doesn't seem like a big deal. But we thought that sort of decentralized money and value is the killer application. Look at Bitcoin, right? We've been able to create 200 billion in value, or maybe a little bit higher than that. I'm not sure exactly where Bitcoin is today in total market cap, but it's been relatively sort of sustained, right? And this sort of the concept of decentralized value, I think, is the killer application for the time being, until maybe we find something else.
Definitely, I would agree.
So peer-to-peer sort of money transfer, funds transfer, it's something that hasn't really been realized because there's not a really good scalable platform that people are actually using today. But I think long story short, that's why we think that these sort of financial applications have the most promise. And that's why we've been focusing in on sort of building those sort of applications ourselves with the Avalanche protocol, being able to support sort of native issuance of assets on the exchange, and being able to support, everything that the EVM has to offer, just because of the fact that, I think those are, being able to issue assets, ERC20 tokens, those are probably the most well understood and well sort of like there's a lot of people sort of issuing tokens under the ERC20 standard, right? And so it would be probably the best developer experience to offer those tools out of the box, and not reinvent something, and not try to chase after something that isn't super tangible. We like to sort of have a very principled approach, and sort of think things out from sort of first principles, and then go from there. So yeah, that's the sort of thought process behind that.
Oh, that's great. So I guess with a couple of minutes, so how did you end up? I mean, personally speaking, how did you end up at Ava Labs?
That's a good question. I think for me, ironically, me and my friends, we got into cryptocurrency way back in 2013 through mining, because back then it was mostly just about Bitcoin. I had done my undergrad degree at Cornell, and so there was a lot of the sort of blockchain or distributed ledger technology research, really like distributed systems and cryptography, was happening at Cornell. And I had just been sort of following the latest research at the time all throughout my sort of undergrad. And I had joined the team actually pretty early on, because when I was on campus in 2018, about mid-2018, I met with Professor Searer. And at the time, I was working at a venture capital firm, and we sort of spoke about the Avalanche protocol. It was 3 days after he had announced it. And at the time, he was looking to, Professor Searer, our founder, for those who may not know, he was, like the team was relatively small. It was just him, and his 2 PhD students, and they're looking to bring on, I guess, a bigger team. And at the time, he extended me this invitation to join, and I, it just sort of, I read the sort of the paper cover to cover, and this thing just looked like, the next big thing to me. And I had joined basically a couple months later, and been focusing on more sort of business development strategy stuff, since the beginning.
Yeah.
But I had, it's a startup, right? And you kind of have your hand in a little bit of everything.
No, of course. No, that's what's great. I had a similar experience. I was working at a bank, and opportunity presented itself to enter this sort of market, and it just seemed like to your point, just seemed like the next thing, and it just seemed like a fascinating opportunity. So yeah. Similar. What are some of your favorite projects in blockchain that are not DeFi related? Because everyone knows DeFi, and I think it's important to focus that blockchain technology can be focused on can be used for other applications and is maybe used by other people outside of finance. So I'm curious if you have one that's not DeFi related.
It's a very good question, and with the finance point, I would say that that's the most promising sort of application in a sort of decentralized environment that we've been focusing on today. But in regards to other applications, and this is just because what I work on, and I'm sure there's other applications of other types of technologies in blockchain that are really interesting. But and I'm not an expert in cryptography. I would say I probably understand distributed systems and consensus pretty well, but cryptography is a little bit not out of my alley. But I'm sure there's very interesting applications for privacy, etc. there that I might not know about. I would say very concrete applications of a consensus protocol, especially one that like ours. I would say so. Just to give credit where credit is due, I have a coworker, and he's a senior engineer at Avalanche. His name's Colin Couchet. He had some previous experience working in sort of in traditional, I guess, technology consulting and technology development. And he worked on an application that related to supply chain data integrity. And we were, one day we were chatting about this, and I was just interested in what he was working on. and how maybe a protocol like Avalanche could be applied to that setting. And he mentioned that with supply chain data, it has to be very, very secure, and the data needs to be maintained in a way that it's accessible. And there were multiple cases where a large pharmaceutical company that he worked with in the past, they experienced some very sort of low probability events where their data centers had gone down because of a hurricane, or for example, an event that sort of took out their data, right? And that was catastrophic for them as an organization because a lot of that data needed to be accessed very quickly, and it needed to be it needed to be very secure, right? And so how a consensus protocol like Avalanche can help is, so since we don't cap the number of, validators of sort of transactions, or in this case, the number of machines that store and update the data, the supply chain data, we can have a very large number of data centers sort of maintaining a single supply chain database. And with this, with more sort of machines, you can imagine that it's more decentralized, more fault tolerant. And so if one single machine goes down, that the rippling effects, there wouldn't be sort of rippling effects that would take down other machines, right? If all these machines are distributed in a very sort of geographically sort of separate way, right? You could have multiple different data centers maintain this same data and have very, very high integrity. And even if a couple data centers go down, the probability that all the data centers go down is very, very low, just because of the fact that you have more data centers maintaining the data. And so and just to be very concrete and sort of elucidate the sort of value proposition here, is, so we have a supply chain database that we want to secure, and we can use Avalanche, the consensus protocol, to spin up thousands, if needed, right? Thousands of sort of data centers that can all secure that data, right? And so the probability that all of these sort of data centers goes down is quite low. And a pharmaceutical company can rely on this system to be able to have access to that data in a very, very reliable way, right? So this would be an application that doesn't really relate to finance, but more general application of the consensus itself to an area that I think there is some pretty good sort of product market fit here. And
that's interesting.
Proposition for some enterprises, right?
Yeah. Well, if anyone's listening, maybe that might give them the idea. So I guess the last question I have is how can we as a community, and for those listening, how can we be helpful to you and to Ava Labs?
Yeah, so we're actively sort of developing our ecosystem. We're always looking for good projects who may need a home, and if you're to the extent that you're a new project that's looking to build on a very sort of highly scalable, highly performant platform, so we're building up this incubator program. We're also building up the ways that we can add value to some of these projects that are building on Avalanche. So what I think is really nice is that a lot of our team members, they're willing to sort of spend the time and mentor some of the projects. So all the team members with their sort of respective sort of expertise in marketing or software development, protocol development, or graphics design, you name it, right? Business development. We'd like to be able to support all our projects in a sort of very, very hands-on capacity. And to the extent that we are operating our own sort of company and operation here, but to the extent that we have extra bandwidth, we are very, very happy to allocate some of our own resources to helping projects build and sort of scale out on the Avalanche platform. And so to the extent, just to the original question, if anybody has any good ideas of potential applications that can be built upon Avalanche, we're all ears. I think feel free to sort of, I'd be happy to send some small amounts of Vox toolkit to you guys if you haven't sort of played around with it already, and just for you guys to sort of test and see how the platform works. Very happy to sort of discuss any sort of ideas that you have to improve our platform.
Great. Well, everyone can go to avalabs.org to find out more about both the Avalanche protocol, what's new at Avalanche, and also apply for a grant. Phillip, thank you for coming on today. It was a real pleasure.
Yeah, and thank you for the insightful questions, and really appreciate the time.